Hey everyone, welcome back to UJXanti. In this series, we try to understand whether the current rally of Bitcoin resembles more with 2019 scenario or 2020-2021 parabolic rally that we experienced. In the first three parts, we discussed gold breaking out of its multi-year resistance zone that happened in 2019 and 2024. In the second part, we discussed Bitcoin dominance correlation with Bitcoin's price. In 2019 and in the last 2 years, we had a positive correlation. However, in 2020 and 2021, we had a negative correlation. And in the third part, we discussed the yield curve inversion, which happened in 2019 and it happened back in 2022, and the yield curve is still inverted now. The links to the first three parts can be found in the description of this video. Please check those out. And today in part 4, we are going to look at the 21-week EMA, Exponential Moving Average. This is one of the most used moving averages in technical analysis, and that's especially true for crypto. Because Bitcoin, for example, finds its support or resistance close to 21-week EMA very frequently. Let's get rid of the drawings and let's have the 21-week EMA in our chart. Here in yellow line, we can see the 21-week EMA, and it will be good to start with 2019 rally. And then we'll go to 2021 and then to today's rally. As can be seen from the chart, in 2019, when Bitcoin started its bear market rally, it broke out of 21-week EMA with a big candle. It was more than 25% in a single week. After that, during the whole rally, Bitcoin didn't revisit this line as support. And when it did, 21-week EMA didn't hold as support. And again, Bitcoin crashed down for 20% in a single week. And that was officially the end of the rally. And the correction of 20% that we saw in a single week, and that was the week that Bitcoin passed through the 21-week EMA and it didn't hold as support. This indicated that bulls were not in control because they couldn't hold the 21-week EMA as support for a potential bounce. And whenever Bitcoin rallies and it doesn't revisit its 21-week EMA in a couple of months, it's a bad sign. It usually means that the rally is overextended, and it usually means that either we go to blow off top phase, after which bear market usually starts, or it means that a substantial correction is going to come. In 2019, the latter was the case. We didn't go to blow off top phase. However, Bitcoin cooled off and we went into 6-month correction phase. The correction lasted 6 months and it resulted in more than 50% drawdown from the highs. Yeah, it was around 53%. And if we exclude weeks and we compute the correction for only weekly closes, it was around 39 or 40%. Nonetheless, this is a huge correction. And in this rally that we are currently in, that started in 2023, we are yet to see something like this. We are yet to see a correction of 30 or 40%, which is very common in Bitcoin bull runs. And now let's move on to 2020-2021 rally, the blow off top rally. After the 53% correction that we had in 2019, Bitcoin rallied into the recession. Here we had the short-lived COVID recession for a couple of weeks. After that, the Federal Reserve started to print money like never. they started the biggest QE round in the history of the US, and markets rebounded very quickly. And in the first few months of the rally, we see that Bitcoin was not overextended. Bitcoin traded close to the 21-week EMA, and as we can see here, it was not a clear support. However, it was very close to it, only a few percentages off the 21-week EMA. And here we had a clear support for a few weeks. And these three instances indicated that bulls are in control and Bitcoin holds the 21-week EMA as support, indicating that we are in a bull market and there is no corrections incoming. This was a strong signal from the bulls and from the market that Bitcoin's price is strong. However, after that, we got overextended, and it can be seen in this duration. For more than 10 months, Bitcoin didn't revisit its 21-week EMA. And again, the story is similar. When it revisited, it didn't hold the support. And after that, we had the second short rally, which put us in the all-time high territory. And here we had a support zone. This time, it was not overextended. Bitcoin was not overextended. It was only a couple of weeks that it crossed the 21-week EMA, and that's why the chances that bulls were in control and Bitcoin would hold support in 21-week EMA was high. And that's what happened. After that, let's move on to today's environment. And we see that here we had a couple of instances of support. Bitcoin found its support at 21-week EMA. Here was a scenario where we had a fake out to the downside, we can say. It was not a clear support. However, we didn't go down much. And here we didn't have a connection. Again, it was a couple of percentages off. Here we had a clear support. However, it's just a week. It's not a weekly close. And right now we find ourselves in the same situation. So in this rally, we can see that Bitcoin revisited its 21-week EMA very frequently. And this kind of bounces that Bitcoin had off of its 21-week EMA were signs that the rally is healthy and we were not overextended. It also indicated that bulls were in control. So whenever Bitcoin's price went down and it almost lost its 21-week EMA, bulls took control of it and pushed the prices higher. The only exception was this case. We had August of 2023. And here we went down of the 21-week EMA for a couple of weeks. However, it was only a few percentage points. It was not a clear correction. If we measure the drawdown from the 20-week EMA, it's less than 10%. We didn't have big correction here. But it's an exception. It's not a clear support. After that, this one as well, it's not clear support. However, it was very close to it. Then a few weeks ago, we had Bitcoin sitting at $56,000. And after the FOMC meeting, it bounced back very quickly. As we can see, this was not a weekly close. It was just a week. And that was the case for the last week. And we are very close to the 21-week EMA right now. From the technical viewpoint, as well as taking into consideration the fact that Bitcoin found support multiple times at its 21-week EMA during this rally. It's easy to state that chances are high that this time Bitcoin will bounce off of its 21-week EMA again. So from this perspective, we can say that this rally resembles more with 2021 low off top parabolic rally. Because here we had multiple instances when Bitcoin found support, indicating that bulls were in control, indicating that the rally was healthy and not overextended, at least in the beginning. Then, of course, we got overextended. However, in the beginning, we had 3 instances, and all instances were at least a few weeks, so it was not just one single week. This showed that bulls were in control. However, in 2019, that was not the case. In 2019, Bitcoin's rally had 0 support at 21-week EMA. And the first chance that Bitcoin bulls had in order to push Bitcoin's price higher, they failed. They couldn't hold this price. They couldn't hold 21-week EMA as support. They failed, and they failed big, because that week we had a 20% drawdown. So from this perspective, this rally was not healthy and it was not sustainable. We can state it because it was 6 months long and we didn't revisit 21-week EMA during that period. And in 2021, we had 3 instances of support. And this rally had even more support at 21-week EMA. And from this perspective, we can easily state that this rally is similar to 2021 rally. And it seems to be even stronger because we only had 3 instances of support in 2021, and they were very close to each other. And after that, we didn't experience any support. Here we see that we had at least 5 clear supports, and they were evenly distributed, which indicates that we are not overextended. So yeah, in part 4, the conclusion is that this rally resembles more with 2021 rally. If we view the picture from the viewpoint of 21-week EMA holding a support for Bitcoin. To sum up then, in part 1 we discussed gold breaking out of its multi-year resistance zone. It happened in 2019 and it happened in 2024, this year. So gold breakout indicated that current environment is more similar with 2019 scenario. Then in part 2, we discussed Bitcoin dominance, the relationship, the correlation between Bitcoin's price and Bitcoin dominance. And again, it indicated that the correlation was positive between Bitcoin dominance and Bitcoin's price in 2019 and 2024. However, it was negative in 2021. That's why today's scenario was similar with 2019's rally. In part 3, we had a look at yield curve inversion. And as you know, yield curve was inverted. The 10-year and 3-month was inverted back in 2019, and it inverted again in 2022, and it's still inverted now. So from this perspective, from the yield curve inversion perspective, the scenario is similar to 2019. Yeah, let me take this to left. And in part 4 today, we discussed about 21-week EMA. holding a support for Bitcoin. And from this perspective, the rally is healthy and not overextended, and it indicates that it resembles more with 2020-2021 scenario. And by the way, a quick disclaimer, in this series we try to look at data and various indicators to objectively draw some conclusions and insights on whether Bitcoin resembles more with 2019 or 2021 scenario in this rally that we are currently in. And in the first three videos, in the first three parts, we discussed gold breakout, then Bitcoin's dominance and its relationship with Bitcoin's price, and then yield curve inversion. Of course, all these three instances indicated that we are more likely to be in 2019 scenario, and they are bearish, at least for the short term. However, it doesn't mean that it's my conviction or it's my belief or I'm bearish on Bitcoin. In fact, I am very bullish on Bitcoin and many altcoins for the medium and long term. And as I'm not a day trader, I don't care much about short term. So medium and long term are enough for me. If you liked this video and found it informative, please like and subscribe. And please let me know of your thoughts on Bitcoin's current rally. Are you in 2019 or 2021 camp? And what are the reasons for that? Thank you for watching, and I'll see you next time.